You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again. It is Monday. It is 2 p.m. Central. It is 3 p.m. Eastern. Do you know what's going on in the world of crypto? Let's find out together, shall we? It is time for the Crypto Rundown, the program here on the network. We go a little bit beyond our traditional stomping grounds of, our Apple and Tesla and VIX options and glance over at the old crypto derivatives world. See what's cooking in them thar hills from a vol, from a Skew, from an OI, all sorts of fun perspectives here on the show. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many folks are mainlining these days. Keep it up. There's more bandwidth where that came from. Remember, if you just listening to the Crypto Rundown, I know there's still a lot of you who come in just from the world of crypto, just checking out this show. You're missing out on a whole network, nearly a dozen programs waiting for you there, including a lot of great educational content for a lot of you who are maybe newer to the world of options and derivatives. Shows like Options Bootcamp, Options Playbook Radio, the strategy block segment of the show I just got off, the option block. All of that will serve you well if you're trying to get up to speed in the world of options. And of course, if you want to go above and beyond, you feel you're ready for a little bit of additional content in your lives, let's say some pro Q&A sessions where we tackle a lot of crypto topics these days. And of course, options oddities, live streams of this, everything else we do, great giveaways, a whole bunch more. TheOptionsInsider.com/pro is the place to go. I have it on good authority from a little birdie that there may be a certain panel a lot of folks have been waiting for that touched on a lot of crypto derivatives action with our buddy, Mr. Greg Magadini from Amber Data. He just did the panel with me a few weeks ago here in Chicago at the STAC conference. That's going to be hitting our pro feed, I do believe, tomorrow. So keep an eye out for that. TheOptionsinsider.com/pro is the place to go to check all of that out. As we keep on rolling, it is time to roll out the crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up is a newcomer to the program and indeed to the network. He's Antonio Juliano, the founder and CEO of dYdX Trading. Antonio, welcome to the Crypto Rundown program.
Hey, thanks so much for having me.
And Antonio, we have had a rep from your firm on. It was about, not quite 2 years ago, but a little over a year ago now. Back in October of 2022, we had Corey Miller, your growth leader, on the program. But as you mentioned, this is your first time on the network. So why don't you go ahead and give our audience a bit of an overview of your background in the world of finance and indeed crypto, as well as a refresher for all of our newer listeners on what the heck you folks do over there at dYdX Trading.
Absolutely. So I'm Antonio, the founder and CEO of dYdX. dYdX is the largest crypto derivatives exchange that is decentralized. So we've been around for about 6 or so years now. We focus on trading of perpetual contracts, and about $1 billion a day is traded on dYdX. Before dYdX, I got into the crypto space about 8 or 9 years ago, when I was a software engineer at Coinbase, an early hire there, and then left a little while ago to start dYdX.
Coinbase, a lot to get into there, but we won't head there. Instead, let's get into what you folks are working on there. You mentioned perpetuals. You know, it's a fascinating area of the crypto space for me. It's very nascent still for a lot of our listeners. I know I talked to a lot of folks on this network, Antonio, who have been around the derivatives game for a long time, decades even, old school hands at trading options and indeed futures out there. And when I mention perpetuals to them, they have a blank look on their face. They have no idea what I'm talking about. It's still yet to make a lot of penetration into the world of traditional derivatives. I know we have a lot of new listeners on this show in particular all the time. So let's start there. What the heck are perpetuals and why do you guys focus on them over there at dYdX?
So perpetuals, a lot of it is in the name, perpetual, in that they don't expire. So it's a derivative contract that never expires. It's basically a swap, and you can take a long or short position. They can be traded with pretty high amounts of leverage. And one of the reasons they've become so popular in crypto is because crypto is really driven by individual retail traders. Of course, there's institutions trading in crypto as well, but it's pretty different from traditional finance in that most of the action comes from individual traders. So because of that, it makes sense to have a derivative contract that's more targeted at those types of traders. And really a perpetual contract, these things can be contracts on anything, but the most popular ones are just perpetuals on the assets themselves. So you could buy a Bitcoin perpetual contract on a given exchange. There's going to be exactly one of those. So there aren't going to be different strikes. There aren't going to be different expiries. You just go to dYdX and there's one Bitcoin perpetual and you can go long or short that contract. And that makes it a lot easier to understand for somebody that's not as deep into derivatives and is maybe trading with more professional tools for the first time. So that's really the reason why they've become so popular in crypto. And it was interesting. We actually had Arthur Hayes, the founder of BitMEX, in for a chat at dYdX a few months ago, who's the founder of BitMEX. And he was talking about how they invented the perpetual contract and popularized it. They actually started out with options trading in crypto, and tons of people came to BitMEX. This was 6 or 7 years ago at this point, to trade options contracts and didn't understand how the heck they worked. They were like, what is an expiry? What is a strike price? I just want to trade with leverage on this asset. And he kind of came up with the idea of trading perpetuals based off of that. And it solves a lot of these problems. It makes just these professional tools that people normally have access to a lot simpler for people. So that's what a perpetual contract is.
You know, when you think about it that way and you kind of dial it back to brass tacks, it does make a certain amount of sense, especially for the crypto native audience, taking the future, for example, and stripping away the expiration date, or maybe the long-term option and stripping away the strike prices, and just allowing people to effectively come in and say, I want to go long, or I want to go short this asset. There is a certain degree of simplicity there, Antonio, that I could certainly see resonating with a certain segment of the audience.
Yeah, That's exactly right. And these things have become really popular in crypto. To give you a sense, about 98 to 99% of all derivatives trading volume in crypto happens on perpetuals. So there are exchanges that offer products like dated futures or options, but they just really aren't popular compared to perpetuals. And then perpetuals are about 2/3 to 3/4 of all crypto trading volume.
And I'm curious for you folks, obviously you're looking to broaden that pie, broaden that reach beyond the entry-level retail guys who are maybe attracted initially to their perpetuals. So for a lot of people we talk to day to day, the professionals, the derivatives folks who are knee deep in the weeds, like I said, a lot of them still, they like the way things are. They like strikes, they like expiration dates. That's what they're used to. They're not exactly very receptive when we broach the concept of perpetual. So for you folks, how do you go about getting these more, shall we say, next level, the professionals, the derivative savvy folks to dip their toes in the perpetual waters, Antonio?
So I think it's really a lot about the assets that you can trade and the types of customers that are in this market. So being able to trade in a market that has broad participation from retail all the way to institutional is something that's pretty rare. So you can really get unique access to that within crypto and especially within DeFi. There's just different types of customers there. And then the second thing I would say is one of the great things about perpetuals in crypto is there's been a lot of liquidity built up around them. So it's just a lot easier to build up liquidity over a single derivatives market for a given asset than a lot of bespoke different products. So this is really the reason why, even for institutions in crypto, outside of some things happening in OTC, even institutions in crypto, by and large, trade perpetuals because it's just such a much more liquid market. And then you can get broader access to the types of people that you can trade against.
Well, the other big trend we're seeing, of course, just gripping the options world in particular, it's inescapable. We talked about it a lot on that panel I mentioned at the top of the show a few weeks ago. It's all over the cover, the journal and everywhere else these days is, of course, the 0-day trend. Everyone, particularly the retail trader that we're talking about, are just gravitating en masse to these contracts that are listed and expire the same day. So they're migrating a lot of their liquidity to the very, very, very front portion of the curve, all within one trading session. How do you reconcile that explosion, that explosive trend we're seeing in the retail space with what we're talking about here, the perpetuals, where you've gotten rid of the expiration date, you're pushing this contract out nigh on forever? How do you attract some of those folks into the world of perpetuals, Antonio?
I think perpetuals are great because they're customizable. So yes, definitely the contract can exist for a long amount of time, but a lot of people, even within crypto, will trade these on pretty short time horizons, hours or days. And the cool thing about them is it's really custom. It's up to you. You can enter or exit a position whenever you want. We do see a lot of action in crypto happening around new markets. So for example, a new token has just dropped or something like that. There's usually a huge influx of trading volume immediately right after, just with people trading the price action. That's usually pretty volatile around that initial event. And then perpetuals are a really good way to do that. So I think the versatility of perpetuals is one of their strong suits as well.
So you're not worried about the 0-day flow cannibalizing any of that interest going forward?
No, not to a huge extent, as long as we can really enable product experiences for shorter term trading. And those can happen through perpetuals, which is by and large the way it's still happening in crypto today.
One of the big announcements you guys just made is you're building out your dYdX chain on Cosmos, not a platform that we typically hear. A lot of our guests coming through this show, they're going on about building out new applications on Solana for a lot of them, maybe ETH. You went the Cosmos route. So why did you decide to go that way, Antonio?
Yeah, so first, just a little bit of history on dYdX. We're one of the OGs in the space at this point, been around for 6 years, which is not a huge amount of time, but is quite a long time in crypto. So we started out on Ethereum 6 years ago. dYdX was actually one of the very first applications built on a layer 2. So you might hear a lot of buzz about that these days. dYdX was built on layer 2 about 3 years ago. And just a couple months ago, the dYdX chain, this Cosmos chain you were referencing, was the new thing that we released. And the reason for this is we really just try to push the bounds of what's possible with the technology, even within crypto. And the big thing that the dYdX chain unlocked for us was full decentralization, i.e. that the chain is just open source software. The whole product is just open source software. And it's actually controlled by the users. of the software rather than having any central intermediaries. So this was always the plan for what we wanted to build at dYdX. And I think it's just a really powerful concept that you can have a trading platform that's literally controlled by its users, and something that hasn't existed before. And we feel like Cosmos is a really good technology to do that, but still build a really performant product that can have the professional trading features that users of these contracts demand.
The last time we chatted with you guys was about a month before all the madness, maybe even just a few weeks before all the madness broke on the FTX exchange. That, of course, really seemed to stratify the world of crypto. A lot of people said, okay, DeFi is the answer to all of this, and the problem with FTX was there was a man in the middle gumming up the works. Let's get rid of that. A lot of others maybe going the other route, saying, we need more oversight, more centrally clearing, and more regulatory oversight, in which case they went to more, let's say, a listed type model. So very much stratifying the crypto world post FTX. You folks went all in on DeFi, deciding to go that route, which again, a lot of our guests have done that post FTX. I'm curious for you folks why you decided to go that route. And B, we haven't had a chance to check in with you folks since all the FTX stuff broke, and obviously the impact that's had on the business. What was that like for you folks navigating those waters in the immediate aftermath? And was that maybe a linchpin in your decision to fully embrace DeFi going forward?
So we've been around for a while, and we've been making this point for a long time that DeFi is the answer to a lot of these things that have plagued finance, not just in crypto, but throughout the years. And I think traditional finance has really found an equilibrium with a high amount of regulation, and that's awesome. But one of the things we really try to make the case for in crypto is that you can do even better than this. You can enshrine the rules of the trading platform itself into software. And you don't necessarily need a lot of regulation around that. And I do believe that some amount of regulation, even within crypto and DeFi, does make a lot of sense. It just needs to be based on what the technology actually does. So to kind of give you a specific example here, one of the things that DeFi does way better than anything else in finance is auditability. So for DeFi, the smart contracts, i.e. the programs that run on the blockchain, quite literally can hold the user funds, and users have access to them and nobody else has access to the funds. You can see the status of these smart contracts, these programs, on lots of different places. You can just pull up a website and in 10 seconds check all of the financial reserves of dYdX or a lot of other different DeFi protocols. This is just going to be 10x better than the auditability into any other system. Yeah, of course, you could make a given financial exchange do quarterly audit reports, but I can pull up in 10 seconds anytime the financial health of the entire system. And that's just really fundamentally different and better. So we've been excited about that for a long time. I think the FTX stuff a year ago was really just validation of that and validation of what we're building from a principles perspective. And we've also seen a good influx of users into DeFi, especially after that. Clearly, users care a lot about the safety of their funds and have been burned by places like FTX. There's a good amount of contagion with other exchanges having difficulties after that, the centralized ones, that is. And we've seen, just quite a lot of users coming into DeFi because of that. And I think that's just a really exciting validation of what we've been building and arguing for a long time.
Speaking of users coming into the space, the other big driver of interest and trading volume in the space, certainly over the last few months, has been the whole Bitcoin ETF approval process. We saw a massive run up into the end of the year, beginning of this year, leading into the approval. Then we saw, of course, the worm turning a bit, selling off back down below 40K in Bitcoin. Spoiler alert for the Bitcoin breakdown in a couple of minutes, listeners. Back above 50K, at least we were heading that way, right heading into the start of the show. So maybe the worm turning again. All this volatility has driven a lot of volume over the last few months, Antonio, on a lot of venues. What's it been like over there at dYdX? Have you seen a lot of influx of interest in perpetuals leading into the approval and now post-approval? What kind of volume are you seeing as a result of all this tumult in the space right now?
Yeah, definitely we are. And kind of to give you a sense, about 1% of all crypto trading volume happens on dYdX. So still relatively small compared to a Binance, but DeFi is not insignificant anymore. And that's grown quite a lot over the past year or two. And around the ETF, there's certainly been a lot of hype, a lot of volatility, and that's always really good for trading volumes, especially when things are going up. There's quite a lot of interest in going long, and a really good way to do that is with perpetuals. You can see that expressed in the funding rates of a lot of these contracts, funding rate is just a word for an interest rate that's paid between those who are long and short the contract. And funding rates have really been expressing this positive sentiment for a while recently, especially on dYdX. So I think that's been exciting, and there has been a good amount of influx in the past month or two. I think it bodes pretty well for the future, especially in the near term. Have been seeing a lot of people saying that this is likely the start of some amount of a bull market in crypto. I would agree with that. It's hard to tell with these things a lot of times, but the market sentiment seems to be quite positive.
And it looks like you guys rolled out something interesting recently. Tell our listeners, what are Hedgies? What are we talking about with these things?
So that's an NFT collection that we released a year or two ago. And that's something that is mostly just an experiment. I think it's something where people in crypto do feel a pretty big sense of community around the projects that they use. So it's pretty cool in crypto. You can use a given project. You can own assets around that, whether that's an NFT or a token. You can control the project more directly with things like governance. And I mentioned this before, but to make the point again, I think that real community ownership, and specifically ownership by the users of a given platform, is something that's really novel. And one of the ways we've seen this play out on dYdX is there does exist the dYdX token, which governs the actual product and the protocol overall. One of the cool places this has been used is in a lot of trading firms in crypto. We'll hold the dYdX token, we'll vote on things for the actual platform itself. And to see these users actually take a really big role in driving the direction of the platform overall, that I think is something really fundamentally new and uniquely enabled by crypto and DeFi, and I think is exciting, and is just going to create a platform that's much more egalitarian than anything else that you can create before. And that's one of the reasons I and a lot of other people are excited about DeFi.
Well, speaking of things that are interesting and exciting, we have to keep on rolling with the show. But before we do that, Antonio, we like to leave our audience wanting more. So before we roll into some of our other segments, give our listeners a bit of a hint, a bit of a tease, perhaps, of what they can expect coming down the pike from you and the team over there at dYdX in the coming months.
So the big thing we're working on right now is what we're calling permissionless market listings on the dYdX software. And this is really something we're building where anybody will be able to come to the dYdX protocol and list any market that they would like to. There's not going to be any sort of central listing process. It's just like, you want to trade something, amazing, come and put it on the exchange yourself. And again, this is something that's really fundamentally enabled by DeFi and crypto. And something we're excited about. So we're going to be working on that for the next few months, and that should probably come out towards the mid-time of this year.
All right, interesting stuff. And if our listeners want to keep an eye on any of these developments you're talking about here, where should they go? What should they do, Antonio?
So you can follow us on Twitter at dYdX, or our website is dYdX.exchange.
There we go, listeners. Easy to find at dYdX on Twitter, the place to go to keep an eye on all of these updates. As we keep on rolling, it is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the action in the world's leading digital asset. Yep, we're talking about the big dog, which is Bitcoin. And man, spoiler alert, looking a little bit bigger this episode than it did this time last week. On our last show, 42,775. Oh yeah, it's moved a wee bit since then. Not quite 7,000 handles. We're pretty darn close. Remember, we talked about the worm turning in the other direction post ETF approval, Bitcoin selling off a little over 7,000 handles, going from about 47,000 back below 40K. Well, we are now back up above that level and then some. Again, coming in to start the show, 677, up about 6,900 handles. Like I said, just a little bit below 7,000 points from where we were this time just a week ago. So Bitcoin and indeed crypto back in that high action, high movement, high volatility regime we come to know and love out there. We did actually break that oh so important 50K level. In fact, it came earlier today. The high was 50,256. Obviously have retreated from that level now, but a lot of people paying attention to that level, not that far from the all-time highs of crypto, a little bit north of 60K, not too long ago, or I should say all-time highs for Bitcoin. But fascinating stuff. The low, of course, pretty much right during our show last week, 42,265. Haven't really looked back from that level since then. We pretty much just turned around from there and haven't looked back. So fascinating stuff to see. So as you might imagine, vol coming back up, I should say. You know, people think of vol in most assets the way they think of it in the equity markets, which is, of course, S&P goes up or whatever the equity asset goes up, vol comes in, it goes down, vol goes up. That's how they've been trained with products like the VIX for ages. The truth is that vol is movement. And when we see explosive movement in any direction, to the upside or to the downside, vol's going to go up. And that's what we're seeing out there right now on the Bitcoin front. The 7-day vol, the weekly vol exploding. It was a 38 on the show last week, 51.5 this week. So near dated vol getting juicy. Let's go out to a more standardized metric. Let's go out a month. Let's go 30 days. And that's also exploding at about a 52. So almost the same level as the 7-day vol. That's up from a 40 this time a week ago. So up about 12 points. And of course, going out 6 months, that's usually will calmer, saner, cooler heads prevail. That was a 51.5. So that was still looking pretty frothy on the show a week ago. It's up to about a 60 now. So 6-month vol in Bitcoin at about a 60. That's getting frothy again. Not quite at the triple digits level we were at a while ago, but still looking pretty effervescent, certainly compared to where we were not too long ago in the mid-20s. Remember on that episode, I said, this is probably not a vol regime that's going to persist for too long if past its prologue in the crypto space. And here we are again in the 50s in the front month contract and 60s going out a bit of a way. So vol a lot juicier than it was even a week ago out there. 7-day skew. Let's get out there now. Last week, remember, it was kind of flat. We were hovering right around the 42,000 and change level. And I said at the time, the options weren't really pricing in a big move in either direction. They were kind of settling in, kind of waiting for that next shoe to drop. Man, has it dropped? And now, as you might expect, the skew biased to the upside. Maybe not as much as you might think. It's at about a 5 3/4 right now, which is still impressive, but also maybe not the 10, 12, 15 you might have been expecting, given all the action we've been seeing out there over the better part of the last week, and pretty much all of it focused predominantly to the upside. I'm looking here. It looks like the highest we got on the 7-day skew front was about 6.5, and that came a little bit earlier this morning. Well, actually, I take it back. We did spike a little bit higher on the overnight on Sunday. Again, those markets are a little bit illiquid, so take those with a grain of salt. We've got up to almost a 9, about an 8.6 in the positive skew on Sunday night. So again, read into that what it's worth. In the actual trading session, not quite that frothy, but still intriguing nonetheless. The 30-day skew, so going out a full month, that's at about a 5.5 as well. So again, that's pretty much up almost exactly 5 points, a little under 5 points. We were about a 0.65 on the show this time last week. So again, all the skew last week was flat. So if you're looking at the options to tell you we were leading to this enormous upside move, they were not doing that last week. They were showing us we were going to probably hang out here for a little bit, which again, I've said it on the show before, skew is not always the crystal ball that is going to show you instantly which way the underlying is going. It's just showing you which way the options are lining up. And last week, they weren't lining up for a big move in any direction. They were kind of just hanging out flat. If you look at the overnight session last night, the 30-day skew got up to about a little over 5. So it was really just the 7-day skew that got jacked up on the overnight session, which again, illiquid time, illiquid series, makes some sense why that would get a little bit aberrant out there. 5.5 on the 30-day skew, about 5 3/4 on the 7-day skew. So both of those hanging out at about the same level. Going out a full 6 months, we were at a 4.1 positive on the show last week. This week, 7.1, so up a full 3 points. So again, Looking frothy, looking biased to the upside, which if we didn't see that this week, I would be surprised given all the price action we've seen out there over the past week. In terms of OI out there on Deribit, are things looking frothier and juicier and a little bit stronger right now? The answer is yes. The call's up to about 169,500 contracts open. That's up about 19,500 contracts from this time last week. The puts 78,500 contracts open, up about 11,500. So both of them gaining in both directions out there. You know what else is gaining, listeners? Are some of the ETFs and just equities that you folks like to trade when you want a little bit of crypto exposure that is optionable in your securities account. Let's start with BitO. Even though BitO kind of having maybe some of its thunder stolen by all these other ETFs out there now as well, especially if you're more interested in the spot than in the futures, but that's not being reflected right now in the volume. BitO, 23.6 when we kicked off the show, up 3.3 points. The ADV at about 74,000. It's actually coming in a little bit, down about 8,000 from our show last week, but I got a feeling that's going to change because already today we're seeing the numbers back a few years ago when BitO first launched in terms of options volume. 102,000 contracts on the tape already today. So that's a pretty action-packed day. Let's see what's lighting it up. I'm going to go out on a limb and say probably a lot of opening upside call activity, and that is the case. March 25, 6,500 of those trading, all opening. February 23 halves, I said we're at about a 2360. 6,000 of those also opening today, and about 5,500 of the February 24. So these are going out this week. So this is some near-dated paper. Then again, about 6,500 of those also opening. And then just for fun, we have the March 30s, 4,200 of those, but those could potentially be closing. But interesting stuff out there. The vol, a 61. BitO's always been a little bit frothier than the options over there on Deribit, and that remains the case right now at about a 61 on the 30-day vol, up 11 points from what it was this time last week. In terms of size positions, the big dog out there still 104,000 of the Jan 30s, the Jan 2025 30s. So those are looking a lot closer than they were even a week ago. And the Jan 2025 25s, we've been talking about those for a while at number 355,000 of those. Those are looking a lot closer now than they have in the past as well. So a lot of action out there on the BitO front. Not to be outdone saying, hold my beer, kid. We've got Marathon. Marathon was at 26 3/4 when we kicked off the show, up about 9 3/4 points. As of right now, it's at about a 27.40. So it's up another about, a little under 70 cents from where we started the show. So it's up over 10, about 10.5 points from where it was this time last week. My goodness, Marathon just on the rampage, listeners. Spoiler alert, that's going to translate to some volume. The ADV was actually unched at 468,000, but I have a feeling that's going to be changing after today. We're already threatening 600K out there, 588,000 contracts on the tape. Again, those are VIX numbers we're looking at out there. That's a pretty pick your popular equity option, and those numbers are probably going to rival it, if not exceed it. So Marathon, it broke into our top 10 today, our most active top 10 again on our option block show. So that shows you how much interest there is in this product in particular right now. The big dog out there today, we have the Feb 30s, again, expiring this week. 40,000 exactly of those going up today. All of that opening. Let's see where they were trading. We have a bunch of them going up for $1.02 this morning. Like paper maybe sold those, so maybe getting a little bit of near-term yield when the stock was 26.82. Again, you'll maybe get your Marathon called away at an effective price of 31. You won't mind that. And we also have, looks like paper buying them prices between 60 to 87, even 94 cents. So flow all over the place on this strike, but trading from 60 cents to $1 on these Feb 30s. Again, expiring this week. That may sound like a lot of money to pay for an option that's going out in a couple of days, $1. But then again, look at the act. It just traded up another 70 cents since we started the show. So this thing kind of on the rampage. The vol also on the rampage, 141 in Marathon right now. It's up 31 points from where it was this time last week. So yeah, spoiler alert, a lot of action out there. The big position right now in Mara, even though that's probably going to change after today's paper, 32,000 of the March 17 puts. These were at the money puts just a few sessions ago. So talking crazy town out here. So yeah, and then followed by 30,000 of the March 17 call. So that 17 strike has been active. We mentioned that on the show last week, but wow, we can spend the rest of the show talking about this stuff, but we got to keep on going and explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, listeners, let's keep the party rolling, explore everything else going on in the world of crypto outside of the big dog. Except for right now when we talk about the top 10. And man, we've had a lot of shakeups here of late, and I'm going to continue that trend this week. Spoiler alert, everyone holding out hope for Doge to fight its way back into the top 10. Not this week, listeners. Number 10, instead, we have our old friend Chainlink holding down the number 10 spot at 12.1 billion worth of market cap. So that's what it costs to break into the top 10. Now, that's a big change from not that long ago. We were hanging out around 7.5 billion. So obviously, this rising crypto tide has lifted all the boats, including how much it costs to break into the top 10. Number 9, another newcomer back on the scene again after a while. This is Avalanche, been hanging out in the top 10 now for a few weeks at a little bit over 15 billion exactly worth of market cap. Number 8, Cardano, just a tick shy of 20 billion, 19.9 billion for the number 8 spot. Number 7, USD Coin, 27.75 billion. Number 6, XRP, can it get out of its own way? Spoiler alert, not again this week, listeners. 29 billion for market, 29.2 to be precise. Number 5, it's Solana, 48.2 billion. Hit a 110 earlier this week. My goodness. Just the rampage these assets are on. Number 4, BNB, 49.25 billion. Number 3, it's Tether, 96.5 billion. Number 2, it's ETH, 315 billion. And man, we are oh so close to the 1T level again in Bitcoin. 977 billion worth of market cap for a little bit of the old BTC. Let's go out to the number 2 on the market cap list. Number 1 in a lot of your hearts. This is ETH. Is ETH playing along with this massive explosion in crypto assets? The answer is yeah, looking pretty good. It was 2302, so pretty much hovering exactly around 2300 on our show last week. 2617 when we kicked off the show today, up 315 handles. So yeah, that's a pretty good move. Got up to a high of about 2623. That came earlier today, and the low was 2270. It actually came after our show last week. So closing in on about looks like about a 350 handle range on the week. In terms of vol, spoiler alert, things are ticking up, and that's the case in ETH as well. 38.15 on the 7-day vol last week, 54.3. So getting frothier out there. 30-day vol, 40.25 last week, 53.2 this week. Let's go out 6 months, see what's cooking out there. 53.25 last week, and an even 60 when we kicked off the show this week. So across the board, vol ticking up. Again, no surprises there. Skew-wise, are we biased to the upside? The answer is yes. If we weren't, I'd be very surprised. Last week, again, kind of speaking to the flat skews we were seeing across the board. Last show, about a negative 0.5, so effectively flat on the skew front. This week, positive 8. That's a strong swing to the upside. In terms of monthly skew, flat this time last week. This week, positive 6. So again, looking pretty strong out there and going all the way out 180 days. Again, exactly 3 points. We were at a positive 4.3 on the show this time last week. Coming into the start of the show this week, we were at a positive 7.3. So again, a pretty strong swing out there. Let's keep on rolling. Let's go out to the OI. We're actually seeing call OI come down a little bit. It may surprise you. You say, why aren't people slinging more calls? And the answer is, usually when you have these explosive moves to the upside, listeners, people who own calls, guess what they're going to do? They're probably going to take some of those off the table. They're going to take some of those profits. So that's what we're seeing out here on Deribit right now. The ETH OI down slightly, down about 20,000 to about 1.83 million out there. But again, you have explosive upside moves. Not everyone's just going to sit on them forever. They're going to take some of those off. Options have an expiration date after all. You make a profit, you hate to give it up by not doing anything. So that's what they're doing. Maybe they're going to roll out, use those profits somewhere else, like maybe buy in some puts. Puts up to about exactly 600,000 right now on Deribit, up about 19,000 this week. So talking pretty much exactly 3-to-1 calls over puts out there on Deribit. Let's keep rolling through the rest of the altcoin universe, and we'll get out of here for this week. Solana, 111 when we kicked off the show, almost 111 exactly. That puts it up nearly 15 handles. It was a little over 96 on the show this time last week. So man, strong pop for Solana. XRP, like we said, getting a little bit of a lift from about 50.5 cents, about 53.5 cents, but still not really playing ball with the rest of the kids out there, listeners. Good old Doge, 7.8 cents, up to about 8.2 cents this week's a little bit of a lift, but again, not enough to kick Avalanche and Chainlink to the curb and fight its way back into the top 10. Litecoin, 67 3/4 this week, 72.87, up a little over 5 handles on the week. Cardano, 49.4 cents last week, 56 cents this week, up about a little over 6 cents on the week. Polkadot, 681 last week, 730 this week, up not quite 50 cents, but pretty darn close. And everyone's favorite, Shiba, even getting a little bit of a lift there. It was a million zeros, 8.9 on the show last week. This week, a million zeros, 9.5. So ticking up. Shiba Lambos, not quite yet, but looking a little bit better this week than it was last week. All right, everybody. That music means we've come to the end. I want to thank our guest for joining us today, Antonio Juliano, the founder and CEO of dYdX Trading. Want to check out what they got cooking over there on the land of Twitter? It's just at dYdX, or give them a follow on their website, dYdX.exchange as well. Before we get out of here, too, we have a fun question of the week that is going off right now, causing a lot of consternation with our audience, which is the point of the question of the week after all. It's kind of a fun one, but it also dovetails into what we're talking about here, because right at the start of the show, we had Apple and Tesla both trading right around $188. So that raises the fun question, gun to your head, which one would you rather buy? You might say, what does that have to do with crypto? But we also added in a few other choices for you folks to choose. So we also added, hey, forget those, I'll stick with crypto, or forget those, I'll stick with volatility or VIX. And coming into the start of the show, Tesla was winning it with 38.5%, followed by number 2, 30.8% for Apple. And then third, we had crypto, so 23.1%. So almost a quarter of you saying, forget those two, I'm going to stick with my crypto. And hey, given the run something like Solana and others have been on of late, even Bitcoin, kind of hard to argue with that. And then bringing up the rear, even though with our options and volatility savvy audience, only 7.7% for volatility or VIX. Kind of surprising there. But again, this is young, just went live a little over an hour ago. So this is our question of the week. We'll track it throughout the rest of the week. We'll reveal the results on next week's show. In the meantime, have a good rest of your trading week, listeners. We got a lot of great content coming for you. So if you're not listening to the rest of the network to break down what's going on from a vol perspective and every other perspective you can think of, including a great educational content with Options Bootcamp, you're missing out. Make sure you subscribe to the full network. Then, of course, if you want to join us for the pro Q&As, you want to get access to that awesome panel where we did do a deep dive into crypto derivatives with Greg and our buddy, the Flow Master, and everybody else. Only one place to go, theoptionsinsider.com/pro. We'll see you back here throughout the rest of the week for all of our usual array of network content until we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.